Retirement Advisors with the Gradient Investments weekly market update for the week ending January 19th, 2024. Let's get into what's happening. The U.S. large cap stocks continue to rally with the S&P 500 breaching its intraday peak on Friday. Large technology stocks such as Advanced Micro, which is AMD, and Nvidia were leading the way. Company earnings reports have begun with 10% of the S&P market cap reported, primarily in the financial sector. We are still seeing Nvidia keep moving. Upcoming economic releases, the investors will see the first estimate of fourth-quarter 2023 GDP this week. The Atlanta Fed, the GDP now estimate is for 2.4%, while consensus expectations are slightly lower. The market outlook, from a market perspective, investors are coming to grips with the thought that there may be less Federal Reserve action than expected, especially early in the year. It's our opinion that the Fed will continue to be very patient on its cuts and will want significant proof that inflation is well controlled before taking action. Recent commentary from the Fed is supporting this point. This did not stop the S&P 500 from reaching the new intraday highs, and this reinforces our view that stocks can work even if rate cuts are less than expected coming into this year. If the economic growth and jobs remain relatively healthy, inflation continues towards normalization levels, and corporate earnings can continue to grow, this is what will continue to be a positive backdrop for long-term stock performance. What we're seeing is we thought that inflation was coming down. It actually spiked. It didn't spike, but it went up to about 3.4. We were thinking 3%. So, we don't see if the Fed is really going to drop rates that quick. Everybody kind of baked that into the market already, which is why we kind of saw the rally in the fourth quarter. They thought we're going to have some rate cuts. But the soft landing that we're talking about is going to happen, or we're thinking it's going to happen. So we really shouldn't see much of a pullback. We still have a lot of jobs out there. We still have a strong market. We're still calling for about 8 to 10% upside this year. So staying in the G50 portfolio, the Core Select, the G33, those should all still be really good. The ETF you'll see, or that portfolio, we have digital discoveries. They're all doing pretty good right now, but like anything else, we stay the course. We really don't know what the horizon is. We don't know who's going to be the winner or the loser every year. So keeping everything balanced, making sure we have safe money, making sure we have growth money is the way we're going to do it. We're going to keep updated as the year goes. We're seeing a lot with we saw the market go up when you start seeing the primaries for the Republican Party, what's happening there. So it's kind of a balancing act, and there are a lot of things on the horizon, depending what happens with the outcome of the election, what's going to happen to the tax savings next year. So we're going to get into that. We're going to follow that as we go. But that's it for this week's market summary commentary. Thank you so much for being part of the ARA family. If you'd like to get a hold of us, 855-756-5700. Visit us at aradvisorsinc.com. God bless you. We'll see you again next week.